What's going on, guys? This is Caesar. I'm going to teach you about news and Forex and why you should stay away from it. So there's a website called forexfactory.com. I'll have a link for that in the description. But essentially, you can go here. I have it on my favorite bar. You can go here. Today's June 15th. It would tell me any of the upcoming economic news, right? So it'll show you yellow, orange, and red folders. Yellow, very minimal impact. Don't worry about them. Orange is medium impact and somewhat. I don't really pay too much attention to them. The red ones are the ones you want to normally stay away from because the banks control this market. It's heavily manipulated, and with news, they can do whatever they want. Within a minute, price can move 100 something pips, and I'll give you an example about that. But you definitely want to stay away from it if you're new. Even if you're experienced, it's a gambling mentality, trying to get in on a huge move in a short amount of time, which it can be done, and I've done it. If you've been my Facebook friend or have known me in the past, like I made $800 in a couple minutes and stuff like that. But I also lost money just as quick. So it's a double edged sword. Don't recommend trading news, but definitely recommend you paying attention to it. So if you're in any trades and one of these red folders is coming up, I recommend getting out. Even if it goes your direction, just imagine if it doesn't. If you're in that trade, you're going to blow your account. And with news, it can skip over your stop loss. So we set stop losses to make sure it takes us out of the market once it goes against us. Imagine telling the market, or they're placing a trade and putting a stop loss, and it gets gapped over or skipped over, and then you lose all of your money and maybe even more than what was in your account. So highly recommend staying away from news. Make sure you guys bookmark this. I'll show you an example. Let's go to Euro USD, and let's go to the first Friday of the month. We're going to go down to the 5 minute time frame, and you'll see a huge move. Let's scroll. If only my computer wasn't slow. Probably should close some of my stuff, but it's all good. Let's go. 214. We'll scroll out. Or I could have did FOMC. I think I actually saw it briefly. Right here. See this? See this right here? This move? I'm going to put a vertical line here. Okay. And then I'm going to go to the 1 minute. Seriously. All right. So here we go. We're at this major news event, and look what happened. You see all the relative candlesticks. These are all 1 minute, right? You typically don't see huge moves like this on the 1 minute. You'll see moves that are large over periods of time. Like maybe 10, 15 candles in a row that are shooting up or something. But look at what happened on this news event. Look at these wicks. They're hitting stop losses, right? Say someone was in a sell, it probably shot up first, and they either got scared and took their own trade out, or it hit their stop loss before dropping, and then they were pissed because they would have made a lot of money, right? And then people who were buying at this point, thinking, oh, it's going to go up, got cremated, got absolutely annihilated, right? Trying to catch this move here, some people can do it and have done it, but just because it does this doesn't mean it's going to go up. It could do this, whipsaw, and then shoot down so quick you can't do anything about it. So within this time period, it moved. Let's get my info line. Within this time period, it moved about 60 pips within 2 minutes, which is absolutely ridiculous. And then the same thing from this movement up here, we have another above 60, 67 pips. So like 120 pips the market moved within a very short amount of time. Let's see the So again, if you're on the wrong end of that, it's not gonna be good for you. You're gonna blow accounts. And if you see this 5 minute candle here, let me remove this so you can see it better. You see this 5 minute candle here? Look at that. Look at those wicks. This is what's known as a whipsaw. So regardless whether you're in a sell or buy at this point, it took everyone out, man. It took everyone out. Even if you're at a buy and it went all the way up there, chances are you're getting stopped out on this or you're blowing your account on this before it going up. So again, stay away from news. That's my recommendation. If you decide to do what you decide to do, that's fine. But this is probably going to happen to you. And I've been on the receiving end of this, and it is not fun. It is not fun at all. So again, make sure you have Forex Factory. My FX book also has one, but I use my Forex Factory. If you wanted to look at the economic news, see what it means, you can click on that. It'll tell you the source, measures, usual effect. It'll show you the previous forecast. So before these come out, it'll give you, like over here, what it was previously, what they're forecasting, and then once that news event comes out at that time, 4 p.m. Eastern, it'll update with what the actual number is. So if it's lower than this or higher than that, that could be good or bad. You'll normally see whether it's in green or red, just like this, right? For instance, this one was 40% before. Forecast was negative 4.40 and actually was double that. So it was actually worse for the Canadian dollar. Okay. So, pretty simple stuff. Just make sure you're not trading during news. Very important. You want to make sure you open this up before you start trading, especially if you're new. First thing I do is go on to Forex before I start my trading sessions, just to make sure I am not going to get one of those moves, especially not being prepared.